we don't want the mortgage industry or in any industry for that matter to go unchecked.
Yeah, we don't
because
do the
then
Wild West.
Exactly. Then we turn into what it was, and we have another bust in the economy because of the poor behavior in the industry. So it's kind of interesting.
Yeah.
Welcome to Loans Elevated, the podcast that brings you the latest industry news, expert interviews, and insightful discussions that will help you stay ahead in this dynamic market. I'm your host, Brock Lassig, and I've spent years in the trenches of the mortgage industry, helping individuals and businesses navigate the complex landscape of real estate financing.
I'm your co-host, TJ Heidenreich, and together we'll cover a wide range of topics, from business strategies that skyrocket your success to mindset and motivation that fuel your growth.
All right, welcome to another episode. This week, TJ and I are talking about I would say, pretty controversial and pretty significant shift that's happening right now that relates directly to mortgage financing and therefore real estate, which is the question of if the CFPB, in other words, the Consumer Finance Protection Bureau, will survive with the current administration. And there's been some huge shifts, like I pulled up a quick timeline. So the director that served as the director for several years was released on February 1st, and there was an interim director, Scott Bessent, that was placed as acting director, which is the Treasury Secretary in the Trump administration. And then next, Trump nominated Jonathan McKernan, an FDIC board member, as the new director. So now there's a new permanent director. The interim director is out. But it's crazy because they froze for a moment, and I don't know how much has changed or is expected to change here soon because it's kind of a day-by-day thing, but they froze all activity. So all the CFPB employees, I think there were 1,700 employees at the CFPB. All of them were told, you need to go home. You need to terminate all work. You can't discuss anything with anyone outside of the CFPB about pending claims or litigations. Anything that was not already completed and enforcements made was completely paused. And at this point, still is, which is crazy. And I don't believe any of the staff is working. 1,700 people, they're basically, I don't know if you'd call it on furlough or whatever. They're just like out of the office, not working. And the CFPB is effectively like not operating now.
They're in hibernation for the time being.
Yeah, which is crazy. And I mean, it might be worth sharing, like, how significant the CFPB is to the industry.
Yeah, well, I mean, the CFPB, it came into the loan world because of 2008, because of all the predatory lending that became and what caused the bubble in 2008. But since then, I feel there's so much more checks and balances in our industry and so much more red tape. Is it necessary? I don't know. And we've got other agencies that do a lot of the same thing that the CFPB does. For example, the FTC, Federal Trade Commission, and banking regulators. And then also the CFPB doesn't regulate a lot of things like big banks. So I don't know.
Yeah, for sure.
It's interesting.
Yeah, it is interesting. And I think they were put in place, like almost anything, was put in place for a positive reason. And it was to get rid of basically crooks in the financing world, not just mortgages. That's where they started. And they attacked the mortgage world pretty significantly. And they still have. And that's the biggest sticking point right now that a lot of people have with the CFPB. There's several details that we'll talk about today, but like they tend to over-police things in an industry like the mortgage industry, for example, that is extremely reformed. The mortgage industry operates like a big boy grown-up industry, not a cavalier rip off the consumer industry. It used to be that way before the financial crisis, and that's changed. Yet the CFPB continues to enforce lots of things and litigate and fine to the tune of millions and billions of dollars to mortgage companies for things that it's almost like witch hunt style investigations, which is a challenge. And I think that's what most people are frustrated by, those that are frustrated by it. But then the counterpoint is, is there a massive gap in in oversight. Like, we don't want the mortgage industry, or in any industry for that matter, to go unchecked.
Yeah, we don't
because
do the
then
Wild West.
Exactly. Then we turn into what it was, and we have another bust in the economy because of the poor behavior in the industry. So it's kind of interesting.
Yeah, but I mean, what I think has been the interesting part is the CFPB. They were just given all the power, and there's no checks and balances for themselves. Especially the last couple of years when lending's been hard enough for consumers. They've only made it harder.
Right. Yeah, 100%. Yeah, they have made it harder because, like, lenders have to be so concerned over this regulation that sometimes is 0% common sense. The things that there's many things in our industry that we would love to be able to do that are a sole benefit to a borrower. For example, we would love to be able to say, the borrower's having an issue with a closing or something like that on their loan. We would love to be able to say, hey, you know what? I'm willing to cut my compensation on this to help you out with that. Well, guess what? You can't do that. It's not possible. So what has to happen? You can still get help from the lender to do it, but the company has to be the one that foots the bill, and the loan officer has no autonomy to support their client in that. And that's a regulation enforced by the CFPB about loan officer compensation that's like, why does that make sense? Because now we have no ability to support the client.
On the other side of the transaction, if it's a real estate agent, they can do that.
Right.
Which doesn't make sense.
It doesn't make sense at
all. It should
all.
all be the same level playing field.
For sure. Well, and, talking about like level playing field, this kind of gets on a tangent a little bit, but it's one of my really bothersome points is there are three different types of lenders, basically. You've got banks, and then you have brokers. Those are on the opposite side of the spectrum. A bank does loans for the bank, with the bank's programs, with the bank's money. That's it. A broker does loans to a variety of different companies. They send loans to a variety of companies like CrossCountry. So imagine a bunch of different CrossCountry mortgages. Brokers essentially look at those lenders and send loans to a variety of those companies. And they act as essentially like a middleman in the process of consumer goes to broker, broker goes to lender, lender goes to broker, broker goes to consumer, so on and so forth. So, and then in the middle is what we do, which is called a direct lender. So we're not a bank, but we're not a mortgage broker, although we can broker loans out like a broker can do. We shop through dozens of banks and shop just like they do. The difference is we are a direct lender, meaning we close and fund the loan in-house with our financial resources, and then we sell the paper, the note, to like Fannie Mae, Freddie Mac, FHA, VA directly, as opposed to draw the contrast from or even possibly a bank. We might send the paper directly to a bank, like on Jumbo. That happens a lot. We'll send it directly to a bank. So, but we fund it, and then they just buy the final transaction. A broker, on the other hand, has to go to a company that then goes to the agency, like Fannie Mae, Freddie Mac, so on and so forth. But I just wanted to draw that contrast of the different types of players in the industry and get to my point, which is a bank doesn't require a license. So if somebody works for a bank, they do not have to be licensed to do the job that we do on a daily basis. That seems crazy to me. It's such a complicated job. Why in the world would you just have somebody with unvetted expertise?
Well, they could literally just get hired one day and the next day doing exactly what we do.
Doing mortgages, handling the most high-end investment of
and then they don't
lives.
have to follow the same rules we have to follow.
Yeah, which is nuts to me. And then on the other side, you got brokers who, the CFPB, there is a massive disparity in the way brokers are governed with the compliance that's in place. And it's because there are hundreds and thousands of miniature little broker shops all over the place. And they're so small that they're doing so few transactions, in other words, that there's no microscope on them to track what they're doing. But then we get regulated like crazy at a large company. But the frustrating part is brokers have this flaw in the way their compensation works, where if a client asks no question, a broker can just charge a bunch of money on the loan, and that's that. And they have a separate type of compensation that's allowed. But if a borrower starts to ask questions or shops, which we all deal with, and you should shop for a mortgage. I'm not saying you shouldn't, you definitely should. But the broker has a separate compensation model where they just discount the compensation to account for that the person shopping. And the frustrating thing is, in the direct lending world like we're in, we don't have the ability to do that.
No.
The company has to fork the entire bill if we want to discount a loan when it is required.
And we're not saying that one way is right or wrong.
No, I'm saying that everyone should be the same way.
It should all be uniform.
Exactly. And frankly, I kind of think the way the brokers do it is how it should be.
Yeah.
Like the LO should be able to play, the loan officer should be able to play in the game of helping the transactions work. But it's crazy. So that's one flaw in the way the CFPB governs. It's like it doesn't make logical sense a lot of the time. And that's a frustration. But anyway, I went on a long tangent there. What else did you have?
Yeah, well, and it's hard the natural progression of a lender is oftentimes they start as broker, then they become, over time, smaller direct lenders.
Their objective is to always become a direct lender.
Exactly.
Yeah.
But when you're starting off as a direct lender, you don't have a lot of cash. They're hit with the same fees that a cross country would be hit with.
Even more, because there's no economies of scale.
Exactly.
Yeah.
And it can wipe them out, which is that's what stops a lot of these brokers from becoming direct lenders, because they just can't ever do it.
It's a hard feat.
Yeah.
It's hard.
Yep.
So anyway, getting maybe closer to the topic, I don't know why we got on that tangent, but it felt like something important that I wanted to talk about. But, some interesting thoughts here that we could just kind of talk about on the CFPB and the issues, and the reason it's under scrutiny right now with the current administration is the CFPB structure does not require congressional approval for funding. So in other words, the American voters or delegates that the senators and Congress people represent have no say in if the CFPB gets funding or how much funding the CFPB gets. It is a unilateral funding decision from the Federal Reserve, which is weird because they say the Federal Reserve is not part of the government, yet it funds
somehow it's involved
the CFPB, which is the government.
Which literally governs.
Yeah, in a pretty crazy way. So they're unaccountable to taxpayers, but because the Fed funds them, well, if you look at what you could just Google this. Look at the Fed's balance sheet or the Fed's profit and loss statement. The Fed is negative. The Fed is not making any money. They're negative billions and billions and billions of dollars. They are sustaining enormous losses every single year. Yet they continue to fund the CFPB with what money? With money they print and create inflation?
Well, okay, maybe a genuine question I've got too, maybe we can ask AI, is when the CFPB, when they collect fees, or like whenever someone has to pay a fee, where do those fees go?
That's another point that I was going to get to. It's freaking nuts. The CFPB collects fees. Every other agency, the FTC, for example, they collect fines from a bank or something.
Fines, that's what I was looking for. Fines.
Yeah.
Yep.
That flows up to the Treasury. So it basically goes back to the government to be used for the governmental purposes. CFPB, because of the way it's structured, which is the biggest issue right now with the current administration coming after them, is the money goes to them. They have just a slush fund of money.
So in a sense, they're going to try and create rules and regulations so they can make more money. It's becoming a business for them rather than a service for checks and balances. And
the money never goes back to the government or the American taxpayer. The American taxpayer never approves or gets the opportunity to vote on the CFPB.
Well, and what's crazy about this too is Fannie and Freddie they act out of fear of what the CFPB could do, making regulations even harder. Like there's now unwritten or read in between the lines rules that we've got to follow with borrowers that aren't in the guidelines.
Yeah.
Because of fears of what the CFPB could do.
Yep. Yeah. Perception of what might happen, fear of regulation and the fines are, you should look this up real quick. Just look up what were the total fines collected by the CFPB in 2020. 2024. While you're loading that, there is one counterpoint that I think is worth mentioning, which is the frustration is that Congress has no say in the funding of the CFPB, which is an issue because really the taxpayers don't. The reason they originally did that was so that there was less political influence on how the CFPB behaved and what they did. So even to the point of like the president cannot terminate the CFPB director without cause, which is
so it couldn't find exactly for 2024, but over the past 5 years, there's an estimate of an annual $2.5 billion in fines.
$2.5 billion in fines that never makes it back to the taxpayers. It's paid by the taxpayers because if they fine a company, the company has to subsidize that fine somehow. How do they do it? In mortgages, they increase fees, they increase rates to pay for the fines. So really,
it's making it more expensive for consumers.
Yeah. And there's no accountability to, no one even knows where the heck the money went. It's not published.
Right.
Because they're not accountable to anyone.
Yeah.
That is freaking insane. This is crazy. I haven't really thought about it at this level before. So, all right.
Interesting.
Well, they're supposed to be used for consumer relief, the fines. But like I said, they're paid for. It's like socialism, essentially. The fines are ultimately paid for by every single consumer so that they can fund the supposed harm done to a consumer or a collective group of consumers, depending on the situation, that raise a fuss about something. I think my frustration with that is if you're buying a home and you're a grown adult, you should have the logic to do the research to ensure you're basically saying, oh, I got taken advantage of and they should pay me a fine for it. It's like, aren't we responsible for ourselves,
right,
like in our own households and our own money, like we're our own little miniature business of our families, right? Like, if I go negotiate a deal on something, I'm not like, ooh, I'm going to sue them because I didn't do my research well enough or I didn't negotiate well enough. Like, that's crazy.
Yeah. I mean, realistically, I just think it's like, this is old practices we're following from, because of which rightfully so, I think they were put in place with the right intent back in 2008. So much has changed since then.
Yeah.
There's got to be some sort of shakeup.
Yeah. Evolution needs to, and that's the frustrating thing. It went unchecked. It's just this policing body that frankly is and has been politically charged one way or the other, depending on what administration they're serving. It has been politically charged.
Right.
Whether or not the intent was to allow that doesn't matter.
Yeah.
It has been. And it's like, it's crazy. Doesn't make any sense.
I mean, what can you think of any other pros that the CFPB offers other than, of course, checks and balances, but which doesn't?
Besides what you just said, like, go check reckless, predatory issues, but silo it to reckless and predatory issues. Don't beat a dead horse like the mortgage industry has been beaten.
Right.
Like, it was reckless and predatory at times, the mortgage industry. Frankly, it still is. Like, we know this. There are there's some of these smaller, there's a lot of lenders out there in our local marketplace that we know, we've been told by their clients who also talk to us as part of the loan, that they have been informed by them to commit blatant loan fraud.
Yeah. No, thank you.
Like, that is the crap the CFPB should pay attention to. But guess what? That's too difficult to actually zero in on and find. Yeah. So instead, let's look at the big, large companies and let's just go scour through their whole office and do our best to witch hunt and find something to find them for. And they've got the pocketbook to write a check for our slush fund. Like, that's a pretty shitty way of going about this.
Yeah. Well, and it sucks too, because we're already being audited so much from Fannie and Freddie when we sell loans, because
it's constant audit.
They're not as busy because right now when they had huge amounts of staff hired for the run a couple of years ago, and they had to keep them busy somehow. Of course, they didn't lay them off, and
lots were laid off.
Of course.
To your point, they have no production. So we're already, not only are our
Already under the
underwriters slow,
Mm-hmm.
and they're microscoping loans at a different
Yeah,
level,
it's-
just like the whole industry.
Yeah.
But then we're getting microscoped at a
Mm-hmm.
whole different level by Fannie Mae or Freddie Mac or whoever we send the loan to.
Mm-hmm.
And then we have the CFPB coming in and microscoping in a witch hunt fashion to just find stuff. When the reality is, they're like, what we need is regulation or oversight for actual, like, I would just call like little grassroots criminals, because the fact is they act like they're Robin Hood, like helping clients. And I wish I knew some of the names of these people, because the clients that when I hear it, my reaction naturally is like, that's blatant loan fraud. They don't want to tell me who they were working with before, which is frustrating because they should be reported. But these lenders and industry players, because there's realtors too, they act like they're Robin Hood, like, well, no, I know the way around the rules.
I know the gray area.
So I can help this client become a homeowner. And they're under this guise of the homeowner hero in a cape, when the reality is what you're doing is you're guiding a client down a path, committing loan fraud, so they are unqualified to actually buy the house. Just because you know the gray areas and how to break the law, you're guiding them down this process to get into a home that there's a very good chance they could foreclose on, and they are not fit for homeownership.
If it is found out in some sort of audit or something, the lender could call the note due.
That's right. So you put the family at a lot of risk if the fraud was found out.
Yeah.
But the CFPB, or forget about it, say it's some other entity, that is what they should be looking for. It should be a grassroots approach where there's like secret shopping happening to figure out, are people breaking the law? Like, have fake clients call people and basically bait these freaking bad actors in our industry into giving them the fraudulent advice, and then catch them and find them and get them out of the damn industry. Because those are the ones that are screwing it up.
We do secret shopping in our team.
Yeah, for sure. To train our team.
Exactly.
Yeah.
This should be the exact same process.
Well, and the crazy thing is, those same people are the ones that, if this industry didn't have the compensation rules in effect, those would be the same ones overcharging consumers by pulling the wool over their eyes. Like, the ones that behave with integrity, whether the regulation exists or it doesn't exist. The ones that behave without integrity will behave without integrity, whether it exists or it doesn't exist.
Yeah.
It's just the way they do it. And it's like, so, I don't know. I think it's a flawed way.
And this is the only beginning of it. I think there's going to definitely be some evolution to this, and we'll keep you guys updated.
Yeah,
Anything
for
else
sure.
you want to add to it? Oh?
No, except for this is exciting times. I am not a big person into any sort of like pop culture or reality TV that lots of people get excited about. But right now, with the politics and all of the crazy movements happening, this is pretty exciting. So hopefully we'll do a good job at keeping you guys informed on what is happening, why it's happening, what the implications can be as it relates to housing. And yeah, that would be our goal. So thanks for tuning in. If you need us, please reach out to us. Please make sure you follow at Loans Elevated and this YouTube channel if you're watching on YouTube.
Thank you for tuning in. For more industry insights, follow us on all platforms at Loans Elevated.
And to get in touch with our team, call or text 801-713-4000 or visit loanselevated.com.